The Hedgeless Horseman here is February the 23rd, 2023. Today I guess it was a volatile day. Metals sold off a bit, copper a lot, markets, something happened and they were up a bit. Crypto, who cares? I just wanted to start off with just showing the old trusty junior proxy sentiment indicator, and yeah, I mean this is what basically Pierre Lassonde has been talking about, that he thinks the gold sector is actually the easiest sector in the world for the simple reason that it's so volatile and the moves are extreme. This sector goes down 80 or juniors especially, and obviously the sector overall, but especially juniors can go down 80 to 90% now and then. Here, not 80 to 90% here perhaps, but like yes, a very severe correction coming from the top to the bottom, and this is obviously a big one. It's like from here down to here, so it's on par with this one, and that was just the second half of the big leg down from 2011. So I mean this was one of the best rallies ever, I think, in the mining space, and then you have the worst correction ever in the mining space. Here from here is, I mean it's really up there. I mean this washout from here to here led to this was the best quarterly rally in miners ever, I think, if I remember correctly. You can see it just goes basically straight up and top. So it's like, okay, let's say you start off here. This was 2012 to 2015-16. So like, 3-4 years from this level to reach here. And then that got retraced in, I think this was around 8 months. Which is why I keep saying, it's basically 80% of the time this market sucks. 20% it's great. That's basically it. There is, many, the downturns tend to be longer and extremely deep. And as always, I mean, I noticed that today metals being down, yada yada. It's like sentiment is, I mean, everybody, because most people started buying up here, or started buying up here, or started buying up here. That's their start. They don't have any profits to cushion the fall, let's say. No, they got in here. It's not like they got in here and also bought some here and now we're back here. And let's say you picked some good stocks or that. No, this is their baptism typically in this sector. And this goes for any sector. This could be tech, biotech, lithium, gold, copper, whatever. This area here is when people get into stocks or a new sector. People don't start buying the stock market in the depths of the 2008-9 crash when you made most money. No, people got in. I think the volume really picked up in during COVID, for example. And then we had a big correction, obviously, and it's not even cheap. I mean, I think isn't the US, I mean, I think the S&P 500 is not too far off from, I'm just going to check here. Come on. Okay, that seemed to take a bit of loading time. Now here we go. Yeah, so I mean, yeah, it's down what? Right now it's, down 16%. I mean, people have been pissing their pants going from here to here. I mean, compare that to what we're facing in the mining space. I mean, it's first of all, with the dilution, etc. Here you can obviously see that in the case of, you know, kind of a trading sardine like Bear Creek Mining, which has never really been, you know, have had positive cash flow. It's like, yeah, you could explain the slant here was like, yeah, there's continuous dilution, and this is the stock market. I mean, obviously this looks like much better, but that's also the thing. It's like people get in near tops. I mean, this is not when people bought. People didn't buy up here even. I think they really got into it, I think around here actually. Just 1-2 years ago, it's like you see that all the time. People are talking about stocks. People who you don't think talked about stocks. I mean, I've seen on my, you know, Facebook timeline, people got into GameStop and stuff. So this is basically where, you know, the crowd gets in. Same here and same here. That's how it's always gonna be. I'm sorry to say that. It's like they have no idea. Most people have no idea what they're doing. They don't buy something because it's cheap. They buy it because they think it's going to go up more. That is the only reason most people buy anything. They think it's going to go up more. So the stronger the uptrend, the more convinced they are that it's, you know, this will continue. Because why not? It's, you know, been ongoing for I don't know how many years. And the same thing obviously goes with every bottom. Every bottom looks bottomless. Did this look like a good candle? I mean, broke some kind of support here. It's like big fat red candle. That was the best buy in, well, in the last, what would that be like? Okay, I guess this actually went higher, but it's like, yeah, best buy in like 8 years. Recently we saw this level hit here in Bear Creek. And if we just, you know, draw a line here, it's like one could say that the only times that you would find better buys in the junior mining space would be this period here, and this recent period here. Everything else, you know, any other time, pretty much the price and sentiment spends, any other time, sentiment spends at higher levels. So it's like what, like I said, like the 19th percentile. We're pretty close to that. But people have a hard time staying in. I mean, they probably know it's cheap, but that's not obviously why anybody would sell here. It's not because it's expensive. It's because they don't see any evidence of ever making any money. And again, if you sat through it for 2 years, I mean, I know it sounds ridiculous to people because most people don't really understand this simple thing that this sector goes up and down, up and down, up and down forever, always will. We're simply at a down point. And people, and like I said in previous videos, the longer it takes, I mean, the longer the downturn persists, it gets exponentially more painful. I mean, take this dip here. I mean, people weren't crying here, but it's like this candle here. It's much worse than this because it's gone on for a longer time, and it's from starting off from an even lower level. So now it's really when, you know, the saying goes, you know, separating the chaff from the wheat, because this is just gonna get, I mean, this might actually, I think this is actually the bottom, but we don't know. I mean, we haven't, I mean, this was a 200% rip right here. We basically went here, and obviously one expects or hopes that it's gonna go like that, depending on if you have more money to invest, of course. But everything is dirt cheap right now. Everything is absolutely dirt cheap. Especially the higher quality juniors, because I mean, let's face it, the poor quality juniors, they are typically, I mean, regardless of what valuation they have, they, on a long-term basis, they are expensive. If it's a poor management team, poor project, etc., that eventually that's going to go to zero. It's like always, but it can, you know, jump 5, 6, 700% in the meantime, even the crappy projects. But now it's kind of again rigged against us, because strictly because of sentiment. No other reason. There is nobody new who wants to buy in. Nobody else agrees with us yet. Nobody can see how cheap it is. And of course 95% of people don't make any money long term in the stock, or they can't beat an index. So 95% of people have no clue that this and all other sectors go up and down. They don't see a single reason right now to buy. They are not factoring in what's going to happen when history repeats. Here up here they'll happily buy in, of course. And it's like, take lithium. Like I made a point here, yeah. Lithium sentiment went from F off some 3 years ago to being the main rave recently. The lower you sell, the more you give away. Simple as that. This is Pilbara Minerals, Australian listed stock. I remember this back in, I think it was 2017 or something. It was pretty hot back then. I think lithium prices had been doing quite well. But you can see here, it's like just and now of course it's I think it's actually a multi-billion-dollar company, or a couple of billions at least. You can see the immense swings. Minus 99%, up 16,731%. That was the high in 2008, so it took 4 years. 4-year uptrend. 4 years. And this was what? Like a... I don't know if this is actually cut up or something, but it's like multi-year downtrend. What happened here? Early 2018, like 2020, 2-year downtrend again. Minus almost 89%. I think it was actually 89% to this tick. Minus 89. Imagine you had your whole portfolio in lithium here. You're minus 89. If you had 10,000 invested, you would be down to around 1,000. Fast forward, 2.5, 3 years. Well, let's say 2.5. Up 4,362%. And you would be well in the money from this spot here. From 2018, if you bought this top even, I mean, this is obviously a company that's produced, more value. But very few can grasp that. It's like, yeah, okay, they've been creating value. And even if you bought the top here and your portfolio was pretty much obliterated, if you would just have hodled through this, waited for the upturn in sentiment, and now it's very high, you would have gone from like paying $1 to you could have sold your shares for $5.6 in like 4 or 5 years. That's a 450% return in 4 or 5 years. Superb returns. That is obviously what people expect to happen next week or next week. Just goes to show, it's like you could have missed this at the absolute bottom by a mile, basically. Here it was down to what, 12.5 cents. If you paid 48 cents, and you would still be down a lot, like 75%, you would almost have a 10 bagger in 4.5 years. 10 bagger in 4.5 years. The broader market average is 8-9% per year, and 95% of people can't beat that. Do you understand how long you should be happy to wait for a 10 bagger? These are just superb results, and nowhere near the bottom. You bought 75% too early. If you bought here, sat through, let's say, 3 years of first downtrending action, and then going back to neutral. Fast forward a few years more, you would be up 3,453% in like 5-6 years. 35 bagger. 35 friggin' bags. Who made the most money? The one who bought the lowest. The one who bought the cheapest made the most amount of money. But he had to wait. First of all, nobody buys the bottom. Nobody buys the bottom, so you can forget about that. But anyone who buys around this bottom made a ton of money up until today. But when do you think everybody wants lithium miners? Everybody is very bullish on lithium juniors. That would be right now. That would be here as well, and here. So as you can pretty much see, I would say we're at a complete opposite. Lithium is near a high. Very hot sector. I mean, I checked the mail today. It's like another junior who staked lithium ground. And it's probably gonna go up on that news. Nobody buys a junior that's switching to gold now. People couldn't care less. People don't even buy when gold juniors right now that are already undervalued and they have some good news out. Not even that can get people to buy. If it started off as like 100% undervalued, good news come out, it's 150% undervalued, nobody could buy that. Our job is obviously to make the most out of how this sector works, meaning buy as much as possible when this sector is dirt cheap, hold on however long it takes for us to reach a hot sentiment environment. No, I mean, I'm gonna be the boy who cried wolf all the way. I cried wolf down here. That turned out pretty well. I didn't own Bear Creek Mining, but there are quite a few juniors that are at least above their 2022 lows. I mean, some are actually up 300% already, and it's hard to know which and when they're gonna start revaluing. The point is they are going to revalue. This sector has never ever in the history of its existence stayed cheap forever, and it's never stayed expensive forever. This is gonna, because what gets people to buy is an uptrend, momentum. Sooner or later something is gonna happen and momentum is gonna kick off, like it's happened in lithium. This was pretty good momentum and now everybody's in it. And here's good momentum. Again, my point being, buy every crashing sector. Just do that all the time. I'm not too keen on lithium right now because I'm sure as hell not early. Maybe from a long-term perspective, I mean, this could work out. But it's like, I can't, like I said in the last few videos, I can't warrant buying lithium juniors who I don't even know if they're really cheap versus gold, silver and copper juniors where they're like, yeah, it's super easy to see that they are indeed cheap. It's like Warren Buffett says, we want people to agree with us later. I mean, these are the hard yards, and remember that it's gonna feel exponentially worse the longer this keeps on going and the lower it goes. And lo and behold, wouldn't you know it, the best time to buy is when we're at max pain, which we don't know when it's gonna happen. The more pain, the cheaper it is, the better, the more people who buy will make. This was max pain here. Anybody who bought this could have made a fortune in 8 months. The worse it gets, the more you'll make. The more you see people bitching about this sector, the more people throw in the towel, the better the buys are. But let's, and just lastly, it's like, okay, lithium, it's gone down quite a bit from, I mean, prices are still high, but it's like, this is one reason, it's like I've been talking about recently, it's not gonna go exponential forever. No trend lasts forever. It's like, yeah, this has already gone up, multiple times already. And I showed the uranium chart and all that. Now is when people get into this sector. Now. Not here, of course. Not here. Now. After. Sure, let's say you make 50 to 100% on this last move. Up until now, it's like if this goes into a low again, you can forget about those 50 to 100% paper returns you have right now. If it's overvalued, you're borrowing money from the market. If you buy something cheap, the market owes you money. That's one way to look at it. So this is, you can, again, just look out there. Everybody wants lithium because lithium is up here. And lithium stocks have done this. Everybody's finding a reason because there's no excuse, not enough excuses in the world to sell down here in gold and silver. Who do you think is going to make most money in the next 4 years? People who buy lithium up here or gold silver juniors down here? I know what I'm betting on. And this is like First Majestic. I think it was Empire Twitter user who posted this. It's like, I mean, big rip, big crash. Immense rip. This was the 2016 rally. I mean, that was a breathtaking thing to be a part of. I actually sold out of First Majestic here, I think, because I thought it was already getting expensive relative to some other stuff, and I was probably right. But that didn't stop this from going up because momentum is what gets people to buy. Because here they're guessing it's going to go higher because it's already... I mean, they missed all this. I mean, up here, people can't stand having missed this, so they buy in. And nobody's buying now because the short looks horrible and whatever. But it's like you see, it's like rip, crash, rip, crash, rip, crash. I mean, Jesus Christ. I mean, seriously, I don't know how you could lose money in this sector over the long term because it's so incredibly predictable. You don't need to be a geologist or a mining engineer or have a rocket science degree or anything like that to beat a sentiment-driven sector like this. You could basically just play Pong. Whenever it gets down here, you buy as much as possible. Up here, you sell as much as possible. Then you wait for it to happen again. Down, up, down, up. Literally that. You could be off by 1-2 years, no problem. But of course, that's more than people can take because, I mean, I see people like back here just, a week or two ago, they were like, okay, I'm sitting put. It's no big deal. They have okay morale. 2 weeks of more downtrending action. They're ready to sell again. How on earth are you going to make the big money if you can't, look farther ahead than 2 weeks? Again, you don't even need to be anywhere close to a bottom. I drew a line some months ago, I guess. I think ran around here, which basically was anytime you bought at this level, you made 100% within 2 years, pretty much. 100% within 2 years. Obviously, the lower this was, the more you would make within 2 years. So, I mean, let's face it, are the risks to the downside or the upside? Is this sector going to stay extremely cheap or get even cheaper forever? Or is this going to bounce back one day? Obviously going to bounce back one day. And who knows, maybe that's good for 300-400%. So when you lack the discipline, let's say, two weeks of additional downtrend and you're like, I'm going to throw in my hands. I mean, you're not going to make it in this sector. You should be willing to wait for up to 4 or 5 years, or at least 2 years, 3 years for like 200% return. I think there's some cheap stuff out there that's easily gonna go I mean, high quality juniors that, I mean, 200-300% should be a piece of cake in a somewhat better sentiment environment. I'm not even talking about this, a high like this, or sentiment, extreme sentiment high like this. I'm talking about like mediocre sentiment, and I think they could do 200-300%. That's gonna happen. But if you can't wait for well, I mean, if you think about it, you need pretty much, I think you need to be in this sector at least 4 years to play a full cycle. If you get in here and your time horizon is like 2 years, you're gonna sell low. You're gonna sell low. You're gonna sell low. You're gonna sell low. 4 years, then we're talking, because that's when it's actually back. And if you're in it for this period of time and just understand that you should buy cheaper, and more the cheaper it gets, you would be buying all the way down. You would have made money from top to top. Literally that. You can make money from top to top just as long as you buy cheap. So again, it's like Pierre Lassonde says, this is the easiest sector. You just have to make it dumb enough to profit from it, because this is one of the dumbest sectors there are. Again, you could literally just play Pong in this sector, and you would make money, more money than most, more money than put in a lot of due diligence, let's say. Because if they don't grasp this, they're gonna chicken out. Here you buy as much as you can, as long as you can. Who cares if it takes 6 months, a year from now, whatever. When it turns, you're gonna make a fortune. The more you have at bottoms, the more money you'll end up making. That's the simple thing. I don't have any dry powder. I'm plowing in as much as I can every month. I know how rare these opportunities are. And once we're up here, opportunity is gone. I can't go back in time and invest in lithium here. This is where we're at. I don't see the huge opportunity here. Anyway, let's look at some news. Eloro Resources obtains conditional listing on Toronto Stock Exchange. Thomas Larsen, Eloro CEOs, this is a significant milestone for Eloro and its shareholders. The TSX is one of the world's preeminent exchanges for mineral resource companies. The TSX listing will increase our visibility and profile in the capital markets and in the mining industry. I mean, this is a great thing, obviously. I mean, they have a huge project. They have a they have pretty much a Philo-sized target. I mean, not as I would say. The Philo deposit might be even higher quality so far, but the point is that Eloro has Eskay is an absolutely giant mineralized system. And it's still growing every news release pretty much. This is a asset for a major company to put into production one day. So I like that they're going up on the TSX. Good signal value. Core assets samples 8.3% copper, 240 grams per ton AG, and 11.8% zinc at the Kim target, and strengthens land position at the blue property too. I mean, they have a absolute, let's see, okay, this is the Kim Skarn target, 100 meter, okay, scale is not super, but look, they have I think core assets is cheap, based on the potential, because they own an absolutely enormous land package. There's appears to be metals all over the place, kind of like Brixton metals actually. And here you have a high-grade skarn. I mean, they have CRD, they have skarn, they have porphyry, they have more targets than I can count, etc. But as we know, at the lows, potential is discounted the hardest. Potential, you find even confirmed mineralization, multi-million ounce deposits. You have bank success that is selling for maybe 30-40%, 30-40 pennies on the dollar. The ones with like exploration potential, it's like there's more of a if not when they might have something substantial, they get punished even harder. And of course, right now, the problem is not to find something that is cheap, because you can't basically, you could throw darts and find something cheap. I mean, it's just ridiculous how much many cheap companies there are out there. I mean, I think I could have a portfolio like 40 companies, 50 companies. I actually think I could do, let's say, maybe at least 3-4 portfolios with like 20 different stocks, exclusive stocks for each portfolio, and still beat the market over, well, kind of forever, just because I understand how this works. A rising tide is going to lift all boats. Sure, I prefer to be in the ones that actually create value, so the next peaks are higher. I mean, that's what you see basically in, okay, albeit lithium prices are much higher, but it's like, yeah, Pilbara Minerals, you could have literally bought the top here and you still have made money today. As long as the fundamental trend is up of a company and it's not very expensive, it's a hold or a buy. I mean, it's a buy. Novo joint venture partner Liata Mining outlines lithium exploration potential program. Liatan's board has approved an aggressive 2023 exploration budget of 4 million Australian dollars, focusing efforts on the systematic and scientific exploration, demonstrating Liatan's strong commitment and belief in the Quartz Hill project, considering the 24-month Aussie 1.5 million earning requirement to earn an 80% interest in the battery mineral rights in the Quartz Hill project. I mean, that's kind of, I mean, it says it all pretty much. I mean, the deal was that if they spend 1.5 million, they have 24 months to spend 1.5 million and they get an 80% interest. I mean, typically a bunch of companies who are earning in, I mean, they can lowball this obviously for 1.5 million. That's all they require to earn an 80% interest, and they got 24 months to do that, and they get 80%. They willingly are going more than 100% higher, obviously. Yeah, 166% more spending in just the first year. So what does that tell you? They don't even need to spend that much. They willingly spend more than they need to earn in, and in a shorter time period. And Novo would get still retain 20% residual interest. Okay, if you spend 4 million, I mean that's, you know, pretty good spending in this day and age, I would say, in a year, grassroots. If they find, if they find something worth 100 million, that's 20 million to Novo. If they find something 200 million, that's 40 million. If they literally find, you know, let's say, you know, significant lithium deposit, who knows how much that could be worth? I mean, 20%, that, I mean, theoretically could be kind of a company maker for Novo. I mean, that's a very forward-looking statement, but it's like the signal value is obviously great here, that they're willing to spend 166% more than they need to in half the time frame. And Novo will keep 20% of whatever they find, if they, yeah. So it's like, yeah, I like that from Novo. It's like, oh, of course, absolutely nobody cares. I think Novo was down today. Even though it has lithium, but then you have an idea of how crappy the sentiment is for Novo. That not even, you know, positive lithium related news can get the share price higher. My hope is, again, Novo is not a, I wouldn't say it's not a probable growth story, unfortunately, right now. But given they have a lot of cash still and are very cheap, it's like if they find something, they can throw a lot of money at it. And that goes for the Hemi targets and all of that. So it's like, yeah, I'm certainly keeping an eye on Novo, because I know what they could do if they actually make a discovery. It's like they can spend a lot of money in a short time frame. Whereas many juniors, like, they constantly need to raise money. But again, this is obviously a net positive. Obviously a net positive for Novo. Because, okay, since they will get the 20% residual interest anyway, so I mean, if they're willing to spend 4 million in this time frame, that's good. However, I'm not 100% sure how it works if no one needs to, cover their 20% of the money on top of the 1.5 million. Still, I mean, that's not a huge amount of money anyway, but it's like, yeah, really good signal value. This Liatam is getting very aggressive here, at least much more aggressive than they needed to. And maybe if we were lucky, I mean, this could work out pretty well for Novo. Magna Mining. Magna Mining announces intersection of new zone of near-surface sulfide mineralization 1,000 meters east of Green Hill deposit, and reports new assay results from Shakespeare. Again, all of this is free of charge. You're not paying anywhere near what you already have at the Green Hill and Shakespeare deposit. So this is risk-free exploration upside. Today, 4 holes have been completed and intersected, disseminated to locally semi-massive sulfides within a narrow embayment structure. Yada yada. The recent drilling was hard near historically, which intersected 0.58% copper and 0.72% nickel, or 33 meters. And yeah, you can read the rest. At 10 meters down hole. What was the actual? Oh, okay. Okay. Yeah. Oh, okay. Yeah. I didn't even realize. Okay, there are no assays yet. So they're saying that they hit near surface sulfide mineralization. Where there have been really good hits historically here. We are encouraged to intersect near-surface mineralization along strike of the known Green Hill mine ore zones. The width of mineralization intersected are significant, and if the copper-nickel grades are consistent with the historical hole, with further definition drilling the zone may potentially be amenable to open-pit mining. We expect to have assay results for this initial drilling within 4 weeks. I mean, this is just, cream on top, basically. I mean, the Green Hill mine is gonna grow. I mean, the zones they already know, that's going to grow. They might have, 1 or 2 footwall deposit, which could be bonanza on top of that. And now, they're already proving, or hopefully will prove that, hey, there's even more near surface, I mean, and high grade for an open pit stuff if they get, akin to these numbers. These are really good grades starting at 10 meter down hole. Who knows? Let's say this is gonna be worth. I'm just guessing here. Like, I don't know. Maybe they find something that is at least worth 50 to 100 million or something. That's very material to a company that has a market cap of like 182 million, and it's already significantly undervalued based on everything else. And here you have that's some good looking core. Shakespeare assay results as well. This is the more disseminated bulk style deposit they have. I think I did a quick calculation on this, which turned out to be, I think, around 3 grams per ton AU equivalent over 16.6 meters, for example. I don't know what this is, but I'm guessing it's at least like, I don't know, 1.5 to 2 grams per ton perhaps. Important thing here is which was within the feasibility study pit shell but previously undrilled and interpreted as waste rock. So I'm assuming this is not going to be considered waste rock. So that's an immediately value add to Shakespeare mining project, because they have more ore than was thought there. This hole extending no mineralization in the west zone near the S13 zone extends the newly identified shallow dip of mineralization further to the south. Okay, they're proving up there's more. An area below historic drilling and demonstrates continuity of the mineralization in this brecciated area. This area of mineralization remains open to the west. Okay, they're finding more. It's open to the west. Hole 48, down plunge of the current west zone resource, further extending the known depth extent of mineralization in the west zone. Okay, more. Yeah, I mean, they're proving Shakespeare is going to grow. Minor Hoxa, we are pleased to report that this diamond drill program was successful in identifying a wide zone of mineralization between the existing resource and surface in the west zone. In an area previously interpreted as waste in the 2022 feasibility study. Results from the additional 2022 exploration drilling have also demonstrated that the west zone remains open for expansion along strike to the west and down dip to the south, where the dip of the mineralization is shallower than previously interpreted. Okay, great, obviously. Having intersected this zone of shallow dipping mineralization cutting through the gabbros in multiple holes now, we believe this could be the feeder system for the entire mineralized Shakespeare deposit. Okay. Current press release, so they hit here. Well, I guess not every hole. How many holes were reported? 4. It's like 1, 45, 47, 48. This hit. 46. Okay, no significant here, I guess. And where's one? This is one. This is one that found within what was considered waste beforehand. So okay, open for expansion, open for exploration, open for exploration. But the thing is, we believe this could be a feeder system for the mineralized Shakespeare deposit. That's going to be intriguing if they prove to find some high-grade feeder type stuff. I guess that might be this one. I'm not 100% sure actually. But okay, so this was considered, I guess, waste potentially. So if they can infill this, I mean, who knows? Maybe that's 20 million or 10 million. It's like, if you're not taking an evaluation risk, any success here is just gravy on top. Of course the value of Magna went up today. The shares didn't. The share price didn't. Yes, I mean again, this sector is absolutely brain dead. Anybody with some common sense can understand that this news release obviously increases the value of Magna Mining. What shareholders are expected, the value of what shareholders own went up today. Price did not, I think. This is just becoming a better buy. Simple as that. It's unreal how much you can steal. I mean, literally, you have lithium juniors out there with not even close to any kind of resource, trading at the same valuation as Magna Mining. It's just bloody unreal, and people, for whatever reason, can't, figure out how do you beat this sector. I don't know. How about, stop buying every high and buy every low? I mean, it's just ridiculous. If it's not obvious how you can make money in this sector, I don't know, can't make it any clearer. It's like you see good news all the time that doesn't get rewarded. Okay, Eskay Mining. Eskay Mining encounters 1.5 grams per ton AU and 25.39 grams per ton AG over 43.1 meters and 2.84 grams per ton AU and 22.17 grams per ton AG over 16.5 meters in extensional drilling at the TV deposit, consolidated Eskay Creek project. Yeah, I mean, as always, I mean, this is talk about a meaty news release, which is typical of Eskay Mining. And I'm as always waiting for, I expect Quinton is going to talk about it, and I expect the Decker to talk about it as well. but I get it. Like, people are very impatient. They look at the share price like it's down a lot, etc. And people buy into this stuff. That Mr. Market knows what's up. No, Mr. Market is a trend follower. Mr. Market is a trend follower. That's pretty much it. It's like I pointed out in the room. I mean, in the forum on the CEO. It took 109 holes to hit the original Eskay Creek deposit. 109 holes. And they are drilling new targets as well as expanding TV. This is the Tarn Lake area. Where they, drilled a bit. I mean, I think this was the first season. Basically the first season they even worked this target. And I mean, obviously there's precious metal bearing VMS. I mean, that's the, I guess the, I was going to say the here's the Eskay Creek mine. I mean that is the whole point, I guess. There's like, there is smoke all over this place. This is the Scarlet Tarn VMS trend, and you can see the scale bar here. TV and Jeff is even further to the south. Here we have Sib, Lulu, Hexagon Mercury target. Here we have Eskay Creek. I mean, I watched a recent Skina presentation or interview. They talk about, they think there might be an offset piece, like another half of Eskay Creek to the north, just because there was one. I don't know if they drilled it or it was an historical, but one hit in the midst of like 30 misses or something, and that was enough. One good hit, and they're like, yeah, we think there might be one of these VMS snakes here, because they can be very discreet and small. It's not easy to hit that, and this is from an area in this district that which has been worked for decades, and they might, they think there might be an offset extension of the Eskay Creek mine, which they're finding, 40 years later, whatever, since Eskay Creek was discovered, or 30 years. I mean, if that doesn't suggest, how let's say difficult exploration can be, that, there's a chance that there's more of the Eskay Creek deposit just to the north here. And they believe so because they had one good hit between a bunch of misses. So everybody seems to expect that it's like, yeah, Eskay Mining, that's a shit story if they don't hit the bullseye, if they drill like 5 holes at a new target. Eskay Creek is the best evidence of how tricky it is to find these VMS deposits. And when they did hit it, it was worth some $4 billion. So it's like, yeah, just looking at what the share price has done and saying, oh, this is a bad story or good story or whatever. It's like same with some lithium juniors. Okay, you stake a lithium project, you go up, share prices go up 100-200%. Oh, are you suddenly? Oh, you're suddenly. I don't know. It's a fantastic story just because price went up. I mean, more on that point is the Inflection Resources news. There's been one guy that's been bitching in the forum for like weeks or months about management being terrible. Oh, they're not doing anything. When will we get a news release? Okay. How about this news release? Inflection Resources and AngloGold Ashanti, which is a major mining company, signs a heads of agreement for a multi-year exploration earning across portfolio copper gold projects in Australia. How's that for a news release? This is the same team, basically the same management team or people involved, that's heading Headwater Gold, which signed a similar earning. That's the interesting part. It's like kind of a similarly constructed like Headwater Gold's. And I-80 also. I'm gonna cover that later. 16.7 million Canadian after a 35% update. AngloGold Ashanti, know exactly how big that company is. I'm guessing $6 to $8 billion or something. I'm assuming they are not interested in anything less than 500 to at least 500 to a $1 billion project, let's say. Okay, so we know that. They are hunting, and I mean, they've said that from the start. This is the place to be. I mean, and I discussed Inflection just last week, I think. That is the area in Australia where you have a chance of finding these large gold copper porphyry deposits, alkaline copper gold porphyries. And it just happens to be also a tier 1 jurisdiction. Obviously, you could find big copper porphyries in copper gold porphyries in Peru, Chile, etc. I mean, they're famous for that. But miners would much rather have a big copper gold porphyry in Australia than Peru and Chile. That is for sure. This is a tier 1 jurisdiction and it's a land of giants. We know what Cadia is there. We know that Koval is there. We know that North Parks is there. And this is obviously what Anglo Gold Ashanti would like to find. So you gotta ask yourself, like, okay, first of all, okay, it's not a binding earning agreement yet. They have to have a 60-day period to complete further due diligence and enter into a binding earning agreement with the companies. Like, if you look at the guys behind, or the technical team at work in Inflection Resources, that's a bunch of ex-BHP guys, basically. So I'm not surprised by this at all. And we saw what this management team has done with Headwater Gold. They are professional. They have a lot of skin in the game. I think they own like 30% of Inflection Resources, something like that. Huge skin in the game. Is getting a major miner interested. So, I mean, that's a big thumbs up. Summary highlights. Anglo Gold shall fund a total of 10 million Australian dollars in exploration expenditures across the portfolio of projects within 3 years following the execution. 10 million, given how cheap they are drilling, they can test a lot of targets. And they have a large number of targets. 1, 2, 3, 4, 5, 6 are high priority targets, including Duck Creek, which is soon to be drilled again. And then they have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 targets that have yet to be tested. They have killed 1, 2, 3, 4, 5 targets already. They have 1, 2, 3, 4, 5, 6 of moderate priority. 6 high priority, 6 moderate, and what was that? I don't remember what I said. Well, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 targets to still be tested. 6 high priority, 6 moderate priority, and 10 to still be tested. So that's 22 targets in total. 22 targets with a shot of finding a new Koval, North Parks, or Cadia complex. Those are multi-billion-dollar operations today. Inflection has a market cap of 1.17 million Canadian. If Anglo Gold finds one of these and Inflection keeps 25% and gets a royalty, what's 25% and a royalty worth for something that's, let's say, $500 to $1 billion? That's $125 to $250 million plus the royalty, which I don't know, some tens of millions. I mean, obviously, if they find one pretty good deposit here, that would be make Inflection Resources a multi-bagger, and they will do all the spending. I mean, at least in the early stage. So 10 million. I think actually phase 1 will include a minimum expenditure commitment of 6 million. I think if I understand correctly, it's like Headwater. at minimum they must spend $6 million. And if they spend at least 10 million, they reach stage 1. Do they actually get anything here? I don't think they actually get anything. That's interesting. Okay, they must complete this to get to this. So they kind of need to spend anywhere from at least 6 million to at least 10 million. And then they can start phase 2. And that's when they actually can reach 65% interest. And then they can go to 75% if they complete a pre-feasibility study solely funded by AngloGold within an additional 3-year period and grant Inflection a royalty, yada yada. And here you can see it basically broken down here. And they can select up to 5 projects to do this on, to continue earning in. So I don't know how many targets they will drill. We know obviously that the Inflection has 22. AngloGold can earn in and pay for the exploration at up to 5 of these 22 projects if they want to. So the interesting thing is obviously that, okay, to find 5 major mines, I think that is a stretch. I mean, obviously if that happens, Inflection Resources would be, I don't know, 100 bagger. But if they find 1, that's a company maker, obviously, that's a company maker. And who knows, I mean, again, AngloGold can't even keep all the projects in this deal because they must choose up to 5. So who knows, we don't know if they will do that on 0, 1, 2, 3 or 4 or 5. But they can't go over 5 at the end of the day. So Inflection will get 6 million of guaranteed spend. You know, if they complete this agreement. That's nice, obviously. That's like 30% of their current market cap is going to go into the ground. And I think they have some money left. I don't know how much, but let's say 6.5 million of forced spending. Many juniors of this size right now, they might be happy if they raise 1 million, perhaps. Maybe 2 million. Then they will have to raise another 1 to 2 million and then another 1 to 2 million. And it's going to be a continuous drag, basically, because they will need to, unless they have bonkers success in this crappy sentiment environment, they'll probably, need to raise again, and everybody will front run that. In this case, AngloGold would foot the bill. So again, to sum up, 20 that we know, so far 22 targets left, 22 kicks at the can, and we're talking, the goal is billion-dollar plus projects. 22 kicks at the can. You're paying 16.77 million Canadian. AngloGold, if they find, let's say they, 2 projects work out or they find that interesting, that's going to be 10 million to start off with, and for phase 2 it's going to be 7 and 7. So that's 24 million in case they find 2 projects interesting. That's more than the current market cap of Inflection Resources in partner-funded spending, without needing to dilute, because AngloGold Ashanti will spend 24 million proving up Inflection Resources projects. And obviously, again, it's like this is, they are doing a great job. It's with Headwater. They have a huge portfolio. They know how exploration works. It's a process. It's a numbers game. 22 kicks in the can. I don't know how many. They will for sure obviously be testing Duck Creek where they found bornite. That might be a discovery. Who knows? That might turn out to be a discovery. Maybe not. And there's 21 targets left. And if they complete this, at least $6 million is going to go in the ground. Blue Sky, I mean, that's hard to talk about. Because it's, I mean, it would be so insane. I mean, again, we know that they're after probably, in reality, out for at least 500, probably more $1 billion plus deposits. If they find one, and AngloGold is a part of that and gets 75, 25 of that falls to Inflection Resources, and they would be funded, free carried up to a pre-feasibility study, and assuming it's at least minimum 2 million ounces of gold or gold copper equivalent, and the resources within 36 months. Yeah, I mean, they are have shown that they can and not even the entire land package is even included in the deal apparently. Let's see, are there any? Oh, okay. So this target, and this target. So 1, 2, 3, 4, 5, 6. 6 targets that Inflection Resources have. They have, I guess, made a conscious decision to leave out of the and keep 100%. Again, like Headwater. Well, that's interesting. That's very interesting. So, okay, they keep the 100% stake if things go, regardless of how things go, in at least 6 targets here. But out of these targets, AngloGold can earn into 5 of their choosing to continue on. And right now there's 6 high priority targets. So I assume this deal is gonna go through, and in that case it's gonna be like Headwaters. It's gonna be pretty exciting, I think, because they probably will, I would assume, add on more drill rigs. So okay, if we fast forward here, if Inflection and AngloGold finds absolutely nothing of value out of these 22 targets, we'll end up losing money in Inflection Resources, probably, unless they do something else with the company. If they find something that would be of interest to AngloGold Ashanti, Inflection Resources is probably going to be a multi-bagger, if not a 10-bagger plus. With, obviously, there's a scenario where they actually make not only one discovery but more discoveries, and then you can add a 10-bagger on top of that. If they find something really, really big, maybe that alone could be a 20-bagger, etc. I mean, if they would find something akin to, I don't know, Duck Creek has 2 anomalies that's probably going to get tested. I mean, if they have 2 porphyry bodies. I mean, Cadia, for example, also in New South Wales to the southeast of Inflection, that's a $10 billion plus mine, pretty much, mining complex. So that would be, I mean, if you own 25% of such a system, that would be like 2.5 billion for Inflection, and that would be over 100 bagger. I'm not banking on that, but it's like, you gotta appreciate the risk reward here. AngloGold, assuming this deal closes, there's going to be a lot of drilling. If they find something, there's going to be more drilling, and AngloGold will foot the bill on that department as well. So Inflection don't need to raise any money to see that drilling go on and expanded. And again, if they find nothing, we paid 16.7 million right now. Let's, for argument's sake, they find nothing, this company goes bankrupt, which I don't think it will. Even if they didn't really find anything, I think they I mean, typically you don't see a company go down 100% if there's good people in, and there's no way they're gonna even be able to kill this story within the next X amount of years anyways. Like, they can't possibly drill all targets within 2 years, I would think, but within 2 years they might have made a discovery. So in reality, let's think like, well, worst case scenario, let's say it's down minus 64%. Best case scenario, or good case scenario, they make a discovery and Inflection Resources becomes a multi-bagger or a 10-bagger. Better case scenario, they find actually 2 discoveries, and then, let's say a 10-bagger per additional discovery on average. So it's like, from a risk-reward perspective, I absolutely love this story. It's a high-risk, high-reward story, but most high-risk, high-reward stories out there, they're drilling one target. And they don't even have anyone footing the bill. So you can see that all the time out there. It's like, some junior has a grassroots exploration target. They raised 1 million. They have one kick at the can. I remember, I forget the name of the company. But they raised some money, good-looking target in Mexico, drilled, didn't hit anything really, and that the story was over, was killed. That was a high-risk, high-reward story, but that was one target, one shot, meaning one drill campaign pretty much. Compare that to this. Assuming this AngloGold completes this deal after their due diligence, we're talking 6 to 10 million of, at least 6 million guaranteed spend, up to 10 million, and from there it's like 20 million all the way up to a PFS per projects up to 5. And they have 22 targets. If you compare those kind of scenarios or cases, like, obviously Inflection would be probably, I mean, yes, there's a difference in target type, etc., and chance of success, but also in value, because if you find a good copper gold porphyry in New South Wales in Australia, that's probably like Pierre Lassonde. What he's dreaming about is to find a copper gold deposit, because he's super bullish on gold, he's super bullish on copper. Those are his favorite deposits. Plus you have internal diversification, from the metals mix. And as we know, Newmont has just put a bid in for Newcrest Mining, or I think they bid like 16 billion. They hiked up the bid, I think. 16 billion, and like I read an article, it's like the main attractiveness with Newcrest is their Cadia mine, which is to the southeast here in New South Wales, which is a gold copper porphyry. That is that's the flagship asset. Cadia deposit is, I think it's gold copper, but I think it's the largest gold producer in Australia. This is a land of giants, pretty much. And possibly there's no better jurisdiction where you would want that. I mean, even contrary to like British Columbia, I mean, this is Australia. I think this area is pretty flat. I mean, you can kind of see here, and that's why there's overburden. Flat area out in the middle of nowhere, but not like in a remote. I mean, I think there's a road to most of these places. I'm guessing this is actually perhaps a road, but it's not on a mountain top. It's not in a where there's snow half the year, etc. And you could develop mines here. That I'm pretty sure of. So it's like, yeah, I mean, if they find something, you're probably not going to find an area where a gold copper porphyry is more valuable than here, except for maybe some parts of the states, for example. I mean, Arizona, probably a good place, even though Resolution is not getting the go-ahead due to local opposition, I think. And that's like absurdly large and good gold copper porphyry system. Still, I love this. I mean, this is just from this news release. All of a sudden, we can have there's a possibility that Inflection Resources will keep putting out news for years to come that they don't even need to pay for. And basically this probably is turning out to a even better hodl story. We'll know that within 60 days. And in that case, there's going to be a lot of drilling in this area. And again, given the valuation, if they make one discovery here of meaningful size, this is probably at least going to be a multi-bagger. I mean, right now, one could say it's pricing in a 1.7% chance that of something worth 1 billion, for example. And of course, they won't keep 100% of it, but you won't dilute anyway. So one could say it's pricing in 16.7 divided by 250 of finding something worth 1 billion where they keep 250 million, and that's excluding their royalties as well. Absolute, okay. Absolute superb news release. Of course, price went up a bit, but it's like, it gives you an idea just how cheap this is to begin with. Like 35% raise, it's up to 16.5 million after a deal like this. It's just been dirt cheap. Just been dirt cheap. It's like, goes without saying, these guys, I mean, it literally was down at what, 1.8 cents or something. Like, management has huge skin in the game. You know, probably the most impressive technical team I've seen in any junior. They're looking for giants. 16.7 million in a world where it's like everybody's scrambling for copper, especially in a tier 1 jurisdiction. I mean, Barrick is going to Kazakhstan, for example. That's how much they want copper right now. Yeah, great news, great news. I would say good news from all companies today. It was really a good day for news. It's like, but that's the market for you. I mean, even 35% up. I mean, this is a joke. SK actually went down 4%. Magna, I think, ended down a bit. It's like, are you kidding me? Core asset, I don't know what that did actually. I think Eloro went up a bit, but it's like this sector is a joke. This sector is a joke. You know, you can have like 75% IQ and beat this sector. You cannot take this sector seriously. It's that dumb. It's that emotional. I mean, not even Newton was able to beat the stock market. It's not because he was stupid. It's because he couldn't keep his emotions in check. He was greedy. He bought when everybody else wanted to buy. And he sold, I guess, you know, when everybody wanted to sell. It's like, we just do the opposite. These stocks are cheap. They're dirt cheap. And in my opinion, the only time I'm making a mistake is when I overpay for something. And I don't mean overpaying as in, hey, you bought something, then the store didn't play out, so automatically you're like, oh, okay, I made a mistake because, hey, now, you know, let's say 6 months later, the story has become a bit worse, and all of a sudden you know, the stock is down, and let's say value has gone down. You didn't know that when you bought. But if I don't think I'm overpaying for something I own today, then I'm not making a mistake by definition. And that still is true, even if it goes down 30-50% in price after I bought it. If it wasn't expensive to begin with, I have not made a single mistake just because price went down 50%. Let's say this was super cheap here, Pilbara Minerals. It went down here. Is that a mistake? If the value is up here, you paid this much and it did this. This was not a mistake. Market just made a bigger mistake. And then poof. Buying something cheap is never a mistake. Selling something cheap is by definition a mistake. Buying something possibly overvalued is a mistake. Regardless of what, I mean, from a value investor's perspective, regardless of what actually happens. If this was expensive here and it did this, as a value investor, it wasn't a mistake to sell, even though it went up 100%. That's like First Majestic. I sold out maybe around here because I thought other stuff was cheaper. And I think, I mean, the portfolio did well anyway. But it's like, here it was egregiously expensive, First Majestic. So one could say it's like, oh, or let's say you sell here and it goes like that. Oh, mistake to sell. That depends what do you have a strategy? If your strategy is to own something where the risks are to the upside by definition from a value perspective, and it's not cheap here anymore, then you should sell. And you will miss some of these, of course. But if you're a value investor, you'll still, let's say you thought this was expensive, all of a sudden it's down here and you think, hey, it's cheap again. Okay, it goes up and now it's not cheap anymore, so you sell, etc. Yes, you'll miss the, let's say big, I think this was the silver squeeze or something. Yes, you might miss the blow-off tops, but you'll have pretty big positions if in companies that are cheap when they are cheap. And then you'll at least catch, 100, 200% of pre-easy gains. I mean, I think some of these, like Magna Mining, what a joke that valuation is. I mean, yeah, buy cheap. That's the only thing I focus on. And that works out well. And again, I mean, if you're buying here, it's like, yeah, okay, I'm buying or I'm staying in because I think it could go up more. Who knows? Maybe sometimes it does, maybe sometimes it doesn't. But if you overpay for anything, if you give that long enough, if you overpay for something, even though it goes higher, the gravity is going to take it down. Sooner or later, it's going to go down. And from here, if you buy something cheap, sooner or later, it's going to go up. Think of this as the mean reversion here. It's going to cross this middle point if we're talking this sector. We're far away from the middle point yet. But if you buy something this expensive, you're borrowing money from the market. You're going to lose. It's just a matter of when, not if. If you buy down here or anywhere near these lows, the market owes you money and it's going to pay you sooner or later. And that might be a year from now or 2 years from now. That doesn't matter. Most people can't get 10% per year. If we're talking mean reversions, I mean, or at least, go from cold to hot, we're talking hundreds of percent. This, I can't explain it any more, easily than that. This is, you have to, I mean, it's so dumb. It's so dumb, and you have to get that. You can't be fooled that the market is some efficient pricing mechanism. Well, I mean, it kinda is, but at the same time, it's like moves go 80% more than they should, let's say. Let's say this is a, fair value, whatever. It's like it way overshoots and undershoots. And again, it's like Magna today. Okay, I guess nickel is down a bit today, but it's like, hey, okay, they added more value, and it's not even it's absurdly cheap to begin with. This has no business ever going down until that gap is closed. But that doesn't stop Mr. Market from not appreciating that yet. Yeah, long rant. Consider me biased. I own shares of all companies mentioned. I think maybe every one of these are banner sponsors. I don't own Bear Creek Mining. I'm just using that as an example. And also I-80 Gold also put out good news as usual. And I don't know, I think it's up a bit. But it's like, yeah, that has retraced. What, peaked here at like 4.11 or something? 4.22. it's down like, I don't know, 25%. It's just a joke. This is cheap. It's getting better. This story, I mean, they have increased the value all throughout this time, I would say. It's like, and you still see price like, okay, up to $4 down to like $2. I mean, it's crazy, the swings again. But if you just keep an eye on the fundamental trend, that's up. It's like with inflection, now it might be very up sooner or later. Keep an eye on the trend. As long as the trend is up, fundamental trend, as long as a company is creating value and you think it will keep creating value, basically there's no point in selling except if it becomes really expensive and pricing in, let's say, too much of the good times. How much of the good times is Inflection Resources pricing in? I wouldn't say much. I mean, Jesus, junior with Moose Pasture in 2016 would have this market cap. That's what sentiment does to a valuation. Yeah, thanks for listening. Do your own due diligence, make up your own opinion and all of that. Bye.